Good afternoon, guys. Like Steve said, I'm going to cover the crude oil and the dollar. The first chart I want to show you is the January crude oil. As you can see, overall, the big news fundamentally over the weekend was OPEC announced that they're going to maintain their current production output quotas. This is even despite the fact that the crude oil has spiked over the $90 level. So it looks like OPEC's definitely happy with the crude oil trending higher. Some of the investment banks out there right now are suggesting crude oil should eventually work over $100 a barrel. Chart-wise, this is a Fibonacci fan. As you can see, we've kind of traded it pretty well over the last couple months. We did trade through it for a few weeks back here at the end of November. We kind of caught it on this long-term fan line, got back above it here just a couple of days ago. We held it on Friday, and we held it again today. Overall, you can say the overall trend is up. The trend is your friend. If we would happen to get a break below it, I would anticipate it to come back down to these horizontal trend line support levels and probably be bought pretty aggressively. The dollar is continuing to be weaker. The Chinese economy continues to grow, and that should keep demand for the crude oil in place. On the dollar, we've switched over to the March contract. This is your March contract. We're seeing the dollar have some weakness today for several reasons. The first one, it does look like we're seeing a little bit better risk appetite for investment-wise. So we're seeing the traders dump the dollars and buy pretty much all the commodities were higher today: gold, silver, the oil, obviously, the grains, the softs. They were all trading higher today. So that was putting pressure on the dollar today. We're also there are some concerns about the U.S. deficit. After the Obama administration cut the trade deal or the deficit tax deal for the the Bush era tax cuts, that looks like that's going to balloon the deficit somewhere between $750 billion to possibly $1 trillion, and that's also weighing on the U.S. dollar. Probably the biggest surprise of all that put pressure on the market was this weekend's news that China did not raise interest rates over the weekend. Most people in the trade were expecting them to do that over the weekend. They did not do that. That was definitely bullish to commodities, and the carry trade of being long commodities, selling U.S. dollars was definitely at work. As you can see the chart, we did kind of go through some of the horizontal support today, which is right there at the 79.49 level. It managed to trade through it. As of going into the meeting, we're pretty much trading right above it. A close below this trend line support or horizontal support, I would look for the dollar to make a move back down and test these highs right here, which were at the 78.87 level.